How do I explain XRP to professionals in a way that allows them to understand why it's going to be valuable and what the potential of the investment might be? So where do we start? Most of the time when I start this conversation with somebody, I'll kind of work my way into the asset, have a conversation with them around digital assets to kind of gain their perspective on what they know about the space. Some people know about Bitcoin and Ethereum. Most people do at this point. But a lot of people still haven't heard about XRP. They don't understand what that technology does or why it might be a good investment. And so just before I get into this whole deal, nothing said here is financial advice. Always consult with your financial advisor, your CPA, attorney before making any financial, tax, or legal decisions. All this is, again, for educational and entertainment purposes only. I am not a financial advisor and am no way licensed to give you financial advice or impact your financial decisions. So, disclaimers out of the way. Back to the beginning. So, I always start with a question after having that basic understanding of where their knowledge is in the space. I'll ask them about a payment app. I say, hey, do you use Venmo, PayPal, Cash App, Zelle? And inevitably, they always say yes, right? They use WeChat. If they're from another country, it might be something else. But everybody uses some type of payment app and for peer-to-peer payments. And I'll ask them, when you're sending money from that app to your bank account, what are the options it gives you? And they always tell me, well, there's the instant for a fee, and then, or I can wait 2 or 3 days and it's free. And that is how the banking system currently works. Most of the time, actual settlement and finality takes 2 to 3 days to happen between institutions. So PayPal has trusted partners, and they charge a fee basically to move the money there instantly, and that's how they make a little bit of money. That'll go away in the future with this technology. So that's what this does. If you could have the payment settle instantly for free or almost nothing, people would choose that option, right? And that's what this is going to do. And so you've also got Bank of America and Wells Fargo. They've lowered their overdraft fees down to $10 when for decades they've been $35. Now, why would they do that? Well, because they know that they're going away. There won't be any way for people to double spend the money that's in their bank account because it'll settle instantly. There's no latency between the settlement. So you won't be able to spend that money on credit and then go use your debit card and use the same money. That won't exist in the future. So there's no way for there to be overdrafts, and there's no way for them to charge you for the overdrafts. Now, maybe there'll be a credit line or something else that's associated with accounts. We'll see how that all works out. But the overdraft fees that have existed will not continue in the future once this technology is implemented. I look at it like in the early to mid 90s, people didn't understand email. They kind of laughed at it. There was a lot of newscasts where people discussed like, what is this @ symbol? Why would people use this? Well, back in those days, letters would take 2 or 3 days to go between parties, and it would cost you money to send your letter or package. And now people just don't really use mail a whole lot, especially for just simple communication. They use email because it's instant and it's free. Whether you work or not, you probably have an email address, and you probably receive emails and go through them on a daily basis. And that's exactly how this technology will be. Once it's implemented, there'll be a lot of early movers that get in here, and it'll be adopted by the majority of the large banks. And then over time, it'll move down to the masses with CBDCs and other things that are implemented that allow for instant finality between peer-to-peer payments. And so that's going to be the main adoption of this, and why people are going to use it, because it's faster and cheaper. Now, let's get into why would the asset itself that's within the protocol that allows for the transfer of value increase in price. So it's currently like 50 cents today. Let's just say the main use case in the beginning is going to be international payments, because the latency in that is ridiculous. It's, sometimes up to 10 days if you're transferring money to an obscure bank in some country that has to have multiple relationships to get the money there, and each one of those people that transfers the money takes a piece of it. So oftentimes it's like 10 to 15% of the money that's sent is taken by the fees to move that money to the other country so that your family can have it if it's remittance, right? A lot of people come to work here in the U.S., send money back home to Mexico or in Asian countries. Same thing happens in a couple of those areas as well. And that's just ridiculous. That means that those people are coming to work in that country and making money, and to send it back home, it's going to cost them a whole month's worth of pay just in fees to get that money back to whoever they wanted to get it to. That's ridiculous. And so that's the main market that this is going to disrupt in the short term. So international payments or international remittance. And the current system that facilitates the majority of that is SWIFT. Okay, and that's like the dollar-denominated payment system. And it's a messaging system. It doesn't really deal with the finality or settlement piece, and that's also the reason for the latency and all the fees that are associated with it. So they have moved to be compliant with a certain messaging standard called ISO 20022. It doesn't have to do with the instant settlement piece, but it's a precursor to that. You have to standardize the messaging so that everybody gets the same type of message and data, and then that way they can implement the settlement layer afterward. And who are they going to use to do that? Well, they've got two options. The two people that currently have that capability are RippleNet, which utilizes XRP as its settlement mechanism, and then you have R3 which also uses XRP as its primary settlement mechanism. So they're going to end up using this one way or another for that use case. And let's work through some numbers here. So why would it increase in value? What are the potentialities of the value it could increase to just to facilitate the liquidity necessary to settle those payment flows? Well, on a daily basis, SWIFT transacts about $5 trillion. Yes, trillion with a T. Okay, and currently there are around 50 billion XRP available globally on the market. So let's just say all of those XRP are used in this use case, which isn't likely. There's a lot of people that are just going to hold on to it. There's not that much flowing around, but we're going to go ahead and say, just for this valuation, that there is. So most likely anything that actually does happen, there'll be a higher price than this. So you got 5 trillion in payment flows. You got 50 billion XRP that are going to facilitate those. All right, so simple math. You divide that, you're going to come to $100. That would be the price if the XRP was used one time per day to facilitate those payment flows with that amount of XRP. And then people will argue, yeah, you could use the same XRP multiple times per day to facilitate those payment flows. Up to 10 times a day, you can use that XRP. So in that instance, we're going to divide the $100 by 10. It's a $10 XRP. If all of the XRP that's currently on the market were used, and all of them were used 10 times a day to facilitate all the liquidity necessary for those payments. So at a minimum, $10, okay? Currently 50 cents. You can do the math there. Again, not financial advice, just throwing it out here. And then you've got long-term, right? Like what would be the long-term valuation of this if it were adopted at a global scale for the back-end settlement of all the fiduciaries settling payments over $10,000, which is what I expected to kind of be. Well, you've got international remittance that we just talked about. You've got the FX market. You've got commodities. You've got the stock market. You've got derivatives. You've got real estate. And the list goes on and on and on for things that will be tokenized over the next decade, moved on chain, and be allowed to transact. Because it'll just be more efficient and it accounts for everything. It's over a public ledger. Both parties know that they're going to get what they're supposed to get, and they can see that it's validated, it's settled. So in those instances, I mean, you've got the FX market. It's over $6 trillion a day that it settles. Commodities, you can imagine what that is. The stock market's market cap is $600 trillion. And so, I mean, we talked about 5 trillion, right? Imagine and all of real estate, like what does that amount to? Derivatives, the nominal value, or what people guess derivatives is at, again, and this is a guess because there is no accounting mechanism for all the derivatives that the banks are using, is somewhere between 800 billion and 2 quadrillion dollars with Q. That's bigger than trillion. And I kind of suspect that maybe there's even more exposure than that. Maybe I'm wrong. We will see when it becomes tokenized and moves on the ledger, how much exposure is really out there that these banks are using as leverage and creating a yield with. So if you got all that value on the ledger and XRP is the asset within the protocol that moves all of that value, well, and let me throw another layer on top of this for you. And this one's hard for people to understand, and it kind of blew my mind when I learned about it. There's two sides of every ledger. Okay, you've got debits, you've got credits, or you've got assets. Somebody else's debt is somebody else's asset. Okay, so whatever you think all the money is for all the areas that I just mentioned, just go ahead and double that, because when you double it, you've got to be able to move the debits and the credits across all of those deals. So astronomical. Okay, long term. If you look at Robbie Mitchnick and what he put together, and it's interesting where he sits now. He's now the head of digital assets for BlackRock. He put a calculator together to figure out what the price of XRP was going to be. It was kind of optimal and worked best, when it was 5 digits plus. Okay, so 5 digits meaning $10,000 plus. I'm not saying that's tomorrow. I'm not saying it's next week. I'm not saying it's next year. But as all these assets become tokenized and move on chain, and this asset sits in the protocol and has to provide the liquidity to move those things, that's likely what the price is going to go to. So 50 cents today, $10,000 in the future. We'll see how it plays out. This is all speculation. Again, not financial advice. I'm just giving you some hard facts and numbers. So with all that being said, when I have a conversation with a professional, somebody that is pretty intelligent, they need to understand the supply and demand of why an asset would appreciate over time and the use case that's going to be involved in. And these are just some of the things I discuss with them. If you have somebody, I get this all the time, they're like, man, I like the way you explained that. I think it would be really beneficial if you could talk to my Uncle Sam about it, or my brother John, or my friend Joe. If you've got somebody that's kind of on edge about this, show them this video. I think it would be beneficial for them, just so that they get a better grasp of what XRP is, why it's going to be useful, and the potential for it in the future.